Hey guys, hope you're all doing well. I was working from my home office today. I had some real estate thoughts, so I thought I'd just hop on, do a Facebook Live real quick, and share some ideas and thoughts I've been having around the real estate market. With me and my group, we're always navigating the latest news and what's to come in the real estate market. So I've been getting a lot of questions around what to do around this time, right? Because I have some clients that are looking to buy or have been looking to buy, some clients that might be looking to sell in the near future. So the question is very simple. Do I buy right now? Do I sell right now? What do I do? So I just thought I'd get on and just kind of talk around some of the ideas that go through my head when I think of this question. Um, and if you are online and you catch me online live, if you have any questions or comments, just put them in the comment section below and I will answer them live. And if I don't catch you live, I look at my page pretty regularly, so I will definitely respond when I get a chance. So don't feel bad if you missed the live. Anyway, um, so the question is, do I buy? Do I sell? What do I do? Um, there's a couple of different ways to look at it, to be honest with you. However, there's a couple of headline responses that real estate agents usually make that I don't necessarily endorse. If you look at the trend, inventory is generally very low in the Phoenix market. That being said, that gives you some seller advantage in the sense that if you list in the market, there's less inventory, so you're getting a lot more attention, which can help your drive up your price. However, with the standstill with the coronavirus and everything else, um, it's kind of all up in the air in terms of where it's going to land. So the question is, what is this going to do to the housing market? So I'll give you some general trends that I'm seeing. Things might change on a week to week basis based on news and whatnot, but from what I'm seeing is there's a lot of downward pressure. There's going to be a lot of downward pressure on the commercial markets. And then having said that, with everyone's job, a lot of jobs on the line, a lot of jobs being furloughed and everything else, it's going to be a challenging time for people to make rent as well as pay mortgages. With the stimulus package that came out, there's a lot of support for FHA loans, um, you know, possible forbearance programs with different lenders. So there are some scenarios there that might kind of help keep things from going into foreclosure for people and whatnot. You might see a lot of listings just come up before that, so you might see inventory start rising after the dust kind of settles with this coronavirus and we kind of get out of let's say the peak flattening of the curve, in different states. So we're going to see those trends going forward. Having said that, the question comes down to a specific person saying, hey, is this a good time to buy or is this a good time to sell? Uh, that question, I usually come back to say it depends because, I can, anyone can manipulate any of the numbers to make it look like a great time to buy or sell, to be honest. Like if you know statistics and you know numbers enough, you can make anything look like a good idea. But the question you need to ask yourself is, what does it mean for me relative to my situation now? You have to analyze the two or three or four options you have in front of you. One of them being doing nothing and being in your current state, whatever that is. So, like one rough example I can give you of this is, like, say you're in the market to potentially buy a home, and you're looking around, let's say $400,000, right? Give or take with current rates. Maybe your mortgage is around, $2,000, $2,200, something like that. Let's just say 2,000, just for easy math. Then the question is, do I buy, right? Is this a good time to buy? Well, there is a lot of pressure on jumbo loans, which is above the non-conforming limit of, I think, 517,000. So there's going to be a little challenge there for people that are in that price point. However, if you're under that price point, so like for example, in this $400,000 situation, the question is, well, what are you waiting for? And that's the main thing you need to ask yourself. Well, are you expecting rates to be better? Rates are really, really low, guys. They're at historic lows still in general. I think, from the last time I heard from a few lenders, and maybe they'll chime in here if they get on the Facebook Live, I'm seeing rates under 4 still. You can still get rates under 4 in a lot of scenarios. So money is super cheap. So one scenario is, do you expect money to get cheaper? Well, maybe, but how much is that going to make a difference at this point? When you actually calculate out your mortgage rate against the purchase price of like a $400,000 scenario, you'll be surprised on how much you're saving on a month-to-month basis, cash flow wise. When you get down to like a 0.25% or so, it's I don't want to say it's negligible, but it's not like a make or break the deal type scenario in this kind of price point. So if you just go on Google, do a Google mortgage calculator at $400,000 and look at what your payment would be with an interest rate at 3.5 and another one at an interest rate of 3.25, and you'll kind of see like that. Okay, what does a 0.25 point do to my payment? Oh, okay, maybe I save $100 or something, or $150. So there's that aspect of it. Having said that, it's all relevant to what your scenario is. So if you're saying, okay, should I wait to buy because rates might go lower? Well, maybe, but maybe not. So that's one scenario. So what's the other scenario? Oh, could housing prices come down? Okay, that's a very valid point. Can housing prices come down? Well, no. If anyone's guaranteeing you they won't, they don't know what they're talking about. Like, I never guarantee anything, even as an advisor. Anything can happen. However, what is more likely to happen is what we're talking about here. So I got one person here. Hey, Michael, how's it going, man? So Michael Pamela is part of Mortgage Bee. I've worked with him with a lot of different clients. He's saying rates are available in the low 3s for 740 plus credit borrowers. And he's giving his information in the comment section below. So yeah, that's something to think about. Is that a, price that into your mortgage? He's also saying you are frozen. Am I frozen? All right, let's see here. Am I frozen? I don't know. Let's see. Okay, well, it says I'm live, so let's keep going here for a minute. So yeah, if you're anticipating rates to go low, are they going to? Maybe, maybe not. But at this point, I think it would be more negligible when it comes to that comparison in the $400,000 range. The other scenario is, well, are housing prices going to decrease or take a hit? Well, there's a lot of things that could potentially affect that to make that happen. So then the question is, well, what kind of decrease are you going to anticipate, right? And what's the alternative? So let's say, housing might take a hit. Well, then it kind of comes down to, well, is this your primary residence you're trying to figure out, or is this an investment property? Because that would change a lot of different risk scenarios and profiles. Like if this is your primary residence and you're thinking of, can the housing market go down? Should I buy later? Well, let's play that out. Well, what are you going to do in the meantime? Well, you're going to be renting. So, and what does renting do for you? Not much. So, you're paying, let's say, $1,500 into a rental scenario for a year, right? So, right there, you're looking at $18,000 towards nothing at all. Like you're paying someone else's mortgage, you're paying rent for an apartment or something, right? So that $18,000 in that year is something you won't get back. So, if you bought a $400,000 house and it decreased by $18,000 to $20,000, what does it? You'd be breaking even with that decision in 1 year. So if the housing market would have to decrease and that property would have to decrease more than $20,000 in a year for you to be in the same scenario you'd be in right now if you bought it. That being said, there's some nuances to that. If you're paying a mortgage, the interest you can write off. So, accounting for all that in general, it kind of shows you that, okay, well, what am I actually waiting for? So that being said, on a risk profile basis, if you're in the market to potentially buy, and you're qualified to buy, then I would really look into buying if it makes sense for your specific scenario, if it makes sense for your specific situation based on what your alternative is. And a lot of times it's a cash flow thing too. You need to understand if it's going to affect you on a cash flow basis based on your job, what your expectations are in the next 3 to 5 years. Do you feel like you might move? Do you feel like you want to move? All these different things. How would your house perform on a short-term lease environment or a long-term traditional lease environment? All of these things. And typically with a primary residence, you can leverage very low rates, and years down the road, if it becomes a rental property for you, it can be a very valuable asset because you've locked in the price at very cheap money. So that really can help you in your favor to start creating a portfolio, like a real estate investment portfolio, and kind of backing into that kind of a scenario when you feel like you couldn't otherwise. So a lot of people do that. A lot of people will leverage their primary residence. Every time they buy a new home, every 3 to 5 years, it's their primary residence, and then over time they will rent that out and move into something else that they like. It's a very methodical way of building a real estate portfolio when you don't have a lot of cash out of pocket to buy something outside of your primary residence. So these are all like different ideas and scenarios to think about. And I think the main takeaway is it depends on your scenario. It depends on your situation and based on what you would be doing otherwise if you didn't sell, otherwise if you didn't buy. I spoke about the buying side, but there's also the selling side. Are you sitting on equity? Have you built up equity over the years? Is there a way you could leverage that equity into a new home? How old is your house? Maybe you want to move the equity gain that you have on a older house that you have from a 1970 build to a 2005 build. All else being equal, at least you're moving your equity into something newer. So you're lowering your risk profile there. So that's an interesting way to look at it, in terms of lowering your risk profile when it comes to the gains that you have in this asset that you're owning. So it's something to think about. Or is refinancing just the best play for you? A lot of people are just refinancing their existing home, eliminating PMI in some scenarios. If you didn't put 20% down when you first bought it, maybe you can remove that as well as save on the interest rate itself. A lot of people are seeing a lot of savings in that way. So, as a realtor, I don't get paid on any of that. However, as a financial advisor, running those numbers, it would make total sense for someone to do that, regardless of if it gave me business on a real estate level. It would be in your best interest to look into that if you have that kind of scenario going on where you have a lot of equity, and maybe when you first bought the house, you had PMI, which is private mortgage insurance, which will be put on your conventional loan if you don't put 20% down or have 20% equity when you buy it. So that's saving a lot of people money right now as they're just refinancing their homes. So a lot of different ideas and things to think about around the sell and buy scenario. And I hope some of these points kind of get you thinking about it. I'm just trying my best to stay on top of mind of my past clients, future clients, potential clients, everyone, just to kind of give them ideas to think about, plan for, strategize, and understand what they're getting into or not getting into in the near future, whenever it makes sense for you. So if you have questions or anything, please put them in the comments below, and I'll be sure to answer them. And I'm actually working from my home office today. So, one other aspect of the buy and sell right now that comes up a lot is in that refi is refining is one thing, removing PMI is another thing. One thing that people get hesitant about, and this has come up a few times in the past, so I wanted to mention it in the same video, is people get worried like they might be 5 or 6 or 7 years into an existing mortgage, and if they refied right now, they would lower their payment because, first of all, you're refining to a lower number. Like maybe you bought the house for $400,000 5-6 years ago, and now your principal is 360 or something. So you're you're lowering your payment that way in the refi, as well as you're saving money on the potential interest rate as well, right? Otherwise, why are you doing it? And also you might be removing PMI now. So all those things are going to lower your cash flow obligation. However, some people get worried because they're like, oh no, now I'm resetting my mortgage. So now I have a new 30-year mortgage I have to pay. So maybe I should look into getting a 15-year mortgage or something like that. And everyone can do what they want. But what I usually tell my clients is, um, just because you have a 15-year mortgage, it's going to force you to pay it off sooner. But if your goal is to pay it off sooner, I always caution on the side of what if things don't go your way. And I hate putting myself and my clients in a position where they're obligated to do things, that they may not have had to. So one way to get over that mental hurdle of, oh, I'm in another 30-year fixed, is, well, if you have the extra money, you can pay into your 30-year fixed mortgage, and you can pay it off just as quick. But the upside of that scenario is, if you stay with a 30-year fixed and reset instead of going to a 15-year or something, at least you're not obligating yourself to a very, very high payment. If you obligate yourself to a very high payment, then guess what? You always have to pay that. And if you don't, you become delinquent and you can lose your home. But I rather have the choice to pay double than have to pay double no matter what. So, and by doing so, you're doing everything you would do on a 15-year fixed. Your effective interest rate would be much lower anyway, because if you actually calculated how much interest you're paying, if you're doing those extra principal payments, your effective interest rate is going to be much lower than your APR on that mortgage. And I would consult a mortgage professional to kind of break that down. They can break it down on a spreadsheet and everything and show you those scenarios. It's a very cool thing, and it's a very powerful thing. So on paper, you're achieving exactly what the 15-year does, or even better maybe, but you're not obligating yourself to pay that much into that scenario. Because if you do, then, I always err on the side of, how can you be in a better scenario? So that's something to think about when you are looking to potentially sell or even refi, because when you refi, that comes up like, oh no, I'm resetting my mortgage. What do I do? Maybe I shouldn't because I'm 5 years into it. I wouldn't fret about it. Save the money, lower your cash flow obligations, because when you lower your cash flow obligations, it takes a lot of stress off you. On a financial level, it allows you to do a lot more. It allows you to be flexible. You can afford emergencies more easily that way. Whether you're saving that money or you're paying other debt off with that extra money, it's definitely something to think about, because mortgages are the cheapest part of your financial picture in general, right? Because the money you're borrowing is very cheap at 3%, like Michael was saying earlier, like low threes. So that being said, think of that, something to think about. And yeah, that's about it. That's all I had in terms of real estate. I'll be working from the home office. I might make a couple of more videos and whatnot as ideas and thoughts come up. But, I hope everyone's being safe out there. Hope everyone's doing okay. I know we're going through a lot during this time, being in quarantine and everything else. One thing I've come to say over the last few years is health is not wealth. And it's very true when you actually think about it. Health is not wealth. We are given all the health that we will have when we are born, and every step we take or don't take affects how much or how quickly our health will deplete. So what I've come to see is that health is actually an allowance. And what I encourage my clients, my friends, and family to do is take a moment to realize that your health is your allowance, and find ways to spend it well, and find ways to be happy, and find ways to be in a good state of mind so you can spend that health in the best way while we're here. So don't be stressed out. Hopefully my page, my videos, whether it's real estate related or anything else, life coach or anything else, I wish to be a resource for you guys, a source for positivity, and being optimistic. There is a difference between being positive, having a positive mindset, and being an optimist. I like to be an optimist. I don't think it's healthy to be positive all the time, because that's not healthy. At some point you become delusional, right? So it's not always about being positive, but it's always about having an optimistic mindset and seeing how you can improve a situation, make a situation better for others, find a way to add value to other people, how I can be of service. So those are very important things to me. Those are very important ideas and concepts to me. So I hope this video helps in that way when it comes to your real estate decisions. And in the near future, if you need anything in my wheelhouse that I can help you with, please feel free to share, comment in this comment section below on any of my content, or just message me and reach out, and I'll be more than happy to help wherever I can. And if I can't personally help you in any way, I'll try to find someone who can. So hopefully this helps. Hopefully these ideas help you if you are on the fence, or you have a friend or family member that is on the fence on buying or selling. Share this video with them. Hopefully they can sit down and listen through this and get some ideas, and they can reach out. One of the best compliments I can get is if people share what I'm trying to do. It's not easy making a living self-employed. My value comes from the work I put in, and my intention is to do the best I can for everyone at 100% of the time, because there's no compromise there when it comes to working with me in any capacity. So share this video with someone who might be looking or might be on the fence in the near future, in the near term, or in the semi-near term, to buy or sell. And I'd love to at least have a chance at being their representative and agent, because that's what I love doing it. So I really appreciate anyone who did tune in. Thank you for watching this video live. If you didn't catch me live, just put a question in the comments below. I will see it, and I will respond as soon as possible. So stay healthy, guys. Choose love, okay?